everyone, welcome to the channel. If you're new here, I'm so glad you stopped by, and if you're a returning subscriber, welcome back. It's always great to have you here. Today we're diving into a topic that I know many of you are curious about: how to start investing with just $5,000. A lot of people think you need a ton of money to start investing, but the truth is you can start small and still make it work. And in this video, I'll show you exactly how to maximize your $5,000 investment. We'll explore some of the best investment options available in the U.S., their pros and cons, and a few essential truths you should know before jumping in. And hey, if you have any questions or need clarification, drop a comment below. I'm here to help you out. Well, let's start with one of the most popular and straightforward options: mutual funds. Mutual funds give you access to a diverse portfolio of stocks and bonds. And the best part, you don't have to manage them yourself. Professional fund managers do all the heavy lifting for you. A great way to begin is with index funds, or ETFs, exchange-traded funds. You can start investing with as little as $500, which is perfect if you're just getting started. The biggest benefit of mutual funds and ETFs is long-term returns. Historically, S&P 500 index funds have delivered an average return of 7–10% annually. The key to stock investing is research. Don't just follow trends or jump in based on hype. If you're new to the market, I'd recommend starting with safer options like index funds or ETFs. But if you're ready to try your hand at individual stock picking, start small with just 2–3 companies to minimize your risk. And if you're not sure which stocks to pick or how to analyze them, feel free to ask me in the comments. I'll guide you through it. But here's the deal, you need patience. Markets can go up and down in the short term, but over time, your investment tends to grow. If you're unsure about which mutual fund or ETF to choose, don't worry. Drop your questions in the comments, and I'll help you figure it out. Now, let's talk about stocks this. Options is a bit more hands-on and carries higher risks, but it can also offer higher rewards. When you invest in stocks, you're putting your money into individual companies. If you choose wisely, like companies in the S&P 500 or blue chip stocks such as Apple, Amazon, or Microsoft, your investment can grow significantly over time. Let's move on to digital gold, an option that's becoming increasingly popular. We all know gold has been considered a safe haven asset for centuries, but with digital gold, you don't have to worry about storing physical gold. You can invest in gold-backed securities through platforms like gold ETFs. The great thing about digital gold is that it's easy to get started. You can invest with as little as $1. Plus, you don't have to worry about security or storage issues. However, keep in mind that digital gold doesn't earn interest or dividends. Its value is tied directly to the market price of gold. If gold prices go up, your investment grows. If they drop, so does your investment, right? So if you're wanting to learn more about the digital currencies in your portfolio, the gold business is a good place to start, and also is a good thing to have. If you're curious about how digital gold works or where to get started, let me know in the comments. Next, let's discuss certificates of deposit, CDs, and high-yield savings accounts. These are ideal for those who prefer low-risk investments. With a CD, you deposit your money for a fixed period, say 6 months or a year, and earn a guaranteed interest rate. High-yield savings accounts, on the other hand, offer a higher interest rate than traditional savings accounts. The downside? The returns are typically lower, around 1–2% annually. That may not outpass inflation, but it's a safe place to park your money. Just keep in mind, with CDs, your money will be locked in until the term ends, so make sure you won't need it in the short term. If you're wondering how CDs stack up against other investment options or where to find high-yield savings accounts, drop me a comment. Sue, which option is best for you? Well, that depends on your financial goals, risk tolerance, and time horizon. If you want a safe, low-risk option, CDs or high-yield savings accounts are a solid choice. If you're looking for better returns over time, mutual funds or ETFs might be the way to go. For those willing to take on some risk for potentially higher rewards, individual stocks are worth considering. Just make sure to do your research. And if you're a fan of gold but want a modern twist, digital gold could be perfect for you. Still unsure? No worries. Ask your questions in the comments and I'll help you figure out the right path for you. Before we wrap up, here are a few important tips. 1. Diversify your investments. Don't put all your money in one stock or fund. Spread it out to reduce risk. 2. Think long-term. Don't let short-term market fluctuations throw you off. Stay focused on your goals. Educate yourself. Take the time to understand your investments. If something doesn't make sense, ask questions. Don't invest blindly. All right, folks, that's how you can start investing with just $5,000 in the U.S. If you found this video helpful, please give it a thumbs up, subscribe to the channel, and share it with your friends. We'll leave your questions and comments below. I'll make sure to answer all of them. In the next video, we'll discuss how to grow your small investments into something bigger. Until then, stay smart, stay patient, and invest wisely. Thanks for watching.